While we do talk about the pain, the pressure and the vulnerabilities, let's also talk about what's looking good at this point in time, what continues to look exciting and inspire confidence.
And here, Shireen, I think we don't talk so much about the B2B industry and the B2B sector within India. Like Mohit said, there is the build in India for the rest of the world. We can speak about that later. But the digitization of the Indian B2B sector, I think, is a massive story. And if you really have to realize the value of the China Plus One strategy or the aggregating of the supply capabilities within this country, that can only happen through the type of digitization that some of these startups are enabling. And these companies don't burn a lot of money. So they are profitable pretty much year one.
Mohit, what's looking good to you?
Well, first, I would say we should all just be really happy that we're at the right place at the right time. I mean, honestly, if we look back, 10 years from now, we will realize that this 2023 may have just been the best time to start a company. And I say that for two reasons. First is, you talked about the number of funds that have raised capital. Sequoia raised $2 billion last year for the India market. Accel raised 650. Similarly, Lightspeed, Elevation. Just in these four funds, $4 billion was raised for investing in seed and early stage companies, on growth companies in India. And the one thing I would make sure that the founders listening to the show understand is there is plenty of capital for quality businesses in 2023 and onward. So capital is available, easily available. The second is the Indian consumer is clearly used to and adapting digital services very quickly. 800 million smartphones we've heard of, over close to 8 billion transactions on UPI in December alone. I mean, how many markets have a digital savvy consumer who has got under-penetration of many products and services, and you have an available set of capital? Now the market presents you a macro where talent is a lot more affordable to a founder. There are lesser distractions for the founder. I just think 2023 is a perfect time for many smart founders to get down there and build new companies. So I'm very bullish on what we're entering as a phase of new company creation.
Clearly a very bullish Mohit Bhatnagar there. Mohit, you said capital is not an issue. There's plenty of capital available there. 4 billion between Prashanth, you, Elevation, Lightspeed. Are you deploying capital at this point in time? Are you holding back? I understand there's plenty of dry powder, but are you putting the money to use just yet?
Absolutely.
Or is it still wait and watch?
No. Every day, we have founders, meeting a number of investors all across the country. The doors and the shops are open. Everyone needs to know this. Companies are getting created as we speak, and companies are getting funded as we speak.
Well, yes, that's the graphic on your screens. VC's coffers run full, as Mohit and Prashanth have both just articulated here for us, and that certainly is good news. But Mohit, I want to get both of you to comment on the big event that's coming up in February, and that is the Union Budget. Now, in Budget 2022, the Finance Minister had promised to set up a committee to take care of the regulatory friction that private equity investors and venture capital investors face in India. The Damodran Committee, we understand, has submitted its report to the government. There are several recommendations that have been made there. For instance, carried interest should not be treated as something that carries GST with it. It should be treated as capital gains. And of course, many other recommendations we understand have been made. What's the expectation, Mohit?
Well, I'll just say this, it's seldom do we find a country where government and industry works as closely as we are seeing. I'll give you the most recent example is the gaming regulations that came out. Clearly an example of where industry is consulted, lots of startup ecosystem, voices are heard, and something balanced and something sustainable comes out. So I would say, without getting into the specifics, is we're really happy with the level of engagement. And I think for the most part, the startup ecosystem feels heard as we're getting into these discussions, whether it's around taxation, whether it's on regulations in the different sectors that we invest in. We've really been very, happy to see the constructive approach.
Well, yes, that certainly has been the case. And we just saw the government put out the draft as far as online gaming is concerned, up for public consultation. Prashanth, a large part of the sort of regulatory uncertainty, whether it was edtech or online gaming, do you believe that we are at the end of that and more clarity has emerged or is emerging?
Definitely, I think there is a lot of clarity on those regulations, but there are still a few areas, I think, which, like you said, the Damodaran Committee has to find solutions for. One is the definition of what is a startup. So there is an inter-ministerial board that is being set up where a lot of these nagging issues like ESOP, the taxation on ESOP, they all look like they can get solved if we know we can solve if we can solve the startup definition issue. So that's one broad. The second big issue, I think, is there have been these large fund of funds that have been set up and enabled across agri-tech, clean tech, pharma, deep tech, and so on. So I think we would like to see also some of these fund of funds also bring in more domestic capital and increase the momentum in some of these emerging areas. So there are a few of these areas that where we could see a little bit more action this year.
In terms of what you are doing through the ACT grants, Mohit, let me start by asking you, what's the priority going to be for 2023?
Well, I think the main priority is just to remind everyone that we all have a ability to give back to the communities that nurture us and help us create these startups and these successful businesses. In fact, I wouldn't even say it's an opportunity. It's actually a responsibility to do the right thing and give back to those that do not have the same opportunities that all of us have been given. And it's in that context that the startup ecosystem, investors, founders, the larger ecosystem came together to create this thing called ACT Grants, which is a collective giving back platform for basically doing what we do in a commercial sense, which is make investments, but in this case, give grants, not for equity, but just pure grants to founders.
Prashanth?
Yeah, I think the other important thing that we've been able to achieve is really bring in a lot of the learnings from the startup ecosystem to the social sector. And I think that is where we see a lot of value to bring in a new momentum and energy to the social sector with the same kind of urgency and ability to build scale in our ability to solve. Shireen, we have 75 years right into our thing as a nation. The belief is that what startups could do and have demonstrated in the last decade in a broad set of sectors, can we take some of that to the larger populations in this and demographics in India, which have not been impacted or we have problems that can be solved in the next 25 years and we don't need another 50 or 75 years. And we think that is possible because of what the startups have demonstrated in a very different space. And can we apply that now here?
Absolutely, to try and bridge some of those crucial access deficits that we continue to face. But gentlemen, I want to end by asking you, Mohit, I'll start with you. You said that you believe 2023 is going to be a fiscally fitter startup ecosystem. But, what is the runway now to profitability? Are we talking about the next 3 years, 5 years, 7 years? What's the average that you're working with as far as your portfolio companies is concerned?
Well, the headline for you to know is at every company board meeting, at every investor interaction with the founders, unit economics is core and center to the discussion. People have understood that in order for you to make progress, it's not about just profits. It's about being able to show a sustainable business model. And that's the only way you will get your next round of capital to help you scale, to move into newer adjacencies, newer markets, and so on and so forth. So the days and the years might vary. Typically, a startup has at least 2 years of runway at the very least. That's how folks work backwards from. Many others have been fortunate to get even longer runways. but it's less about the amount of time you have, Shireen. It's more around how do you really demonstrate a predictable, scalable way to monetize your traffic, your consumers, your users.
To the lay public, when they look at this story at this point in time, and to a large extent, of course, there's been a lot of euphoria, rightly so, because we've seen first-generation entrepreneurs create businesses in this country over the past decade or so. But there has been a little bit of a confidence reset as well. What is it that you would say to people who are looking at startups and saying, oh, it's all easy VC money that they have access to, and, they're able to run these businesses, essentially loss-making businesses? I mean, what's the viability of some of these businesses? That narrative has also gained a fair degree of traction through 2022. How would you address that?
So, Shireen, to answer the first question, if you can become profitable, you have an infinite runway. So there is no reason to raise money anymore unless you really want to accelerate growth. So that is the best situation a lot of these companies can get into. And I think all of us in our boardrooms are pushing companies to have less of a dependence. We don't know the environment to be able to raise a lot more growth capital. Could be 12 months, 24 months. None of us know. I think the more these companies can be self-sustaining and independent, I think the runway also can be infinite. That is the first answer. On the second part, I think you will be surprised how nimble, while startups are smart when it comes to taking advantage of a situation where there is a lot of surplus money. I think startups are also smart in readjusting to this new environment where there is a scarcity of money. So you will, I think, be positively surprised, and you will see a lot of startups that will actually demonstrate actual EBITDA profitability in these 12 months. And that will change the narrative. And we'll have a lot of people who believe that startups are just about cash burn and startups don't have sustainable models. A lot of them will, and not all of them will, but I think if you have a good set of them do that this year, I think that can fundamentally change the narrative. And a lot of them might not go IPO this year, but when you see the same numbers in the next 12 months, you will see a more sustainable a set of numbers.
Well, that is what we're hoping for, that we will emerge through this difficult period with more sustainable startups, with more sustainable companies. At the end of the day, as both Mohit and Prashanth have pointed out, you cannot control the external environment. You don't know what's going to happen as far as interest rates is concerned and the cost of money. What you can control is your own unit economics. So that is what you need to focus on and emerge stronger through this difficult time. Mohit and Prashanth, always a pleasure. Appreciate you joining us here on the first edition of Young Turks for 2023. We look forward to having you back, and we hope that we will see the startup ecosystem emerge stronger through this period. Appreciate your time. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.